Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you.
Welcome to our channel, where we delve into the exciting world of market trends and investment opportunities. Let's dive deep into the recent surge in tech stocks, particularly in the AI and chip sectors. First, let's do a recap from last week's trading and take a look what lies ahead in this short trading week. Last week, the stock market was relatively flat, with one sector, information technology, standing out as it rose over 4.0%. The technology sector, along with consumer discretionary and communication services, is one of the few sectors in the S&P 500 that has shown positive performance year to date. This strong performance reflects investors' anticipation of the resolution of the U.S. debt ceiling standoff and the June Federal Reserve meeting. The market leadership has been narrow, driven by a few sectors and large-cap technology companies, which may indicate overcrowding in certain areas and uncertainty about the broader economy. However, as the economy recovers from a potential downturn, market leadership is expected to broaden. A recovery strategy could include investing in small-cap stocks, cyclical sectors, international equities, as well as technology and growth areas. The recent outperformance of the technology sector can be attributed to several factors. Firstly, growth sectors, including technology, experienced significant declines in valuations last year, making them more attractive to investors searching for bargains. Secondly, many large-cap technology stocks have become part of a defensive strategy due to their resilient business models and strong financial positions. Finally, the growth potential of the emerging artificial intelligence space, driven by advancements such as ChatGPT and Google Bard, has attracted investors looking for compelling opportunities. Regarding the U.S. debt ceiling, a tentative deal is being formed to increase the debt ceiling and cap federal spending for the next 2 years, except for defense-related expenditures. Members of Congress are working towards reaching an agreement, and it is expected that a resolution will be announced in the coming days. While the debt ceiling negotiations generate headlines, they tend not to have a long-term impact on market performance. U.S. futures were higher on Monday, with contracts on the Dow Jones rising nearly 90 points, the S&P 500 adding 0.4%, and the Nasdaq 100 gaining 0.7%, as investors welcomed the highly anticipated debt ceiling deal. President Biden and House Speaker Kevin McCarthy reached a tentative deal in a phone call late on Saturday and showed confidence it would pass in Congress. The bill will suspend the debt ceiling until January 1, 2025, and federal spending will be capped for the next 2 years. U.S. stock and bond markets are closed Monday for the Memorial Day holiday. This week, investors will keep a close eye on a batch of economic data, including the payrolls report, unemployment, which is forecasted to be at 3.5%, and the ISM Manufacturing PMI. Last week, the Dow lost 1%, while the S&P went up 0.3%, and the Nasdaq notched its 5th straight week of wins. In terms of specific stocks to watch, Tesla, Netflix, NFLX, Arista Networks, Aehr Semiconductor, NetEase, Mobileye, Smartsheet, Aehr Test Systems, and McKesson are trading nearby points. Aehr stock, Netflix, Semiconductor, NetEase, and Mobileye all flashed buy signals on Friday. Tesla, Aehr Test Systems, Smartsheet, and MCK stock are all close to being actionable. Nvidia is on the IBD leaderboard, and MBLY stock and Smartsheet are on the IBD 50. Arista Networks was Friday's IBD stock of the day, and Smartsheet stock was Thursday's selection. The video embedded in this article discusses the weekly market action and analyzes Arista Networks, Smartsheet, and Tesla stock. In pre-market trading, Dow Jones futures rose 0.1% versus fair value, S&P 500 futures advanced 0.3%, and Nasdaq 100 futures climbed 0.5%. It's important to note that overnight action in futures doesn't always translate into actual trading in the regular stock market session. The debt ceiling deal reached over the weekend provided relief to investors who were concerned about the potential consequences of a default. The agreement has already rallied the markets to some extent, and the news of the deal will likely contribute to positive sentiment when markets reopen after the Memorial Day holiday. Investors will also be keeping a close watch on Treasury yields and the U.S. dollar. Yields have risen in recent days due to fears of a massive Treasury issuance following the debt ceiling deal. Surprisingly, default fears have led to significant flows into the dollar as a safe haven asset. The dollar's strength has been further supported by stronger U.S. economic data and rising expectations of future Fed rate hikes. While U.S. stock markets are closed on Monday, Other exchanges around the world are open, and their activity may influence market sentiment. Traders will be monitoring these developments along with the ongoing debt ceiling situation. Looking ahead, the market rally remains somewhat split. The tech-heavy Nasdaq is approaching its August highs, with the Nasdaq 100 already surpassing them. However, the S&P 500 and the Dow Jones have faced challenges, with the Dow falling below its 50-day and 200-day moving averages before reclaiming its 200-day on Friday. The Russell 2000, representing small-cap stocks, experienced a decline but managed to close above its 50-day moving average. The market rally's recent strength has been driven by tech stocks, particularly those in the AI and chip sectors. Many of these stocks have experienced significant gains, with some reaching all-time highs. This surge in tech stocks can be attributed to several factors. Firstly, the ongoing digital transformation across various industries has fueled the demand for AI and chip technologies. Companies are increasingly adopting AI-driven solutions to enhance their operations, improve efficiency, and gain a competitive edge. This has translated into robust earnings growth and positive investor sentiment towards tech stocks in these sectors. Additionally, the global semiconductor shortage has played a role in driving up chip stock prices. The shortage, which has been exacerbated by supply chain disruptions and increased demand for electronic devices, has created a favorable market environment for chip manufacturers. As a result, investors have flocked to chip stocks, expecting them to benefit from the ongoing shortage and subsequent price increases. Furthermore, advancements in AI and machine learning technologies have captured the attention of investors. These technologies have the potential to revolutionize various industries, from healthcare to autonomous vehicles, and companies at the forefront of these developments are seen as key players in shaping the future. As a result, investors have shown a strong appetite for stocks in the AI sector, betting on their long-term growth potential. However, it's important to note that the recent rally in tech stocks, especially in the AI and chip sectors, has raised concerns about valuations and potential market volatility. Some analysts argue that these stocks may have become overvalued, leading to a higher risk of a market correction. Additionally, any unforeseen events, such as regulatory changes or geopolitical tensions, could impact investor sentiment and disrupt the upward trajectory of these stocks. As always, it's crucial to conduct thorough research, assess your risk tolerance, and diversify their portfolios to mitigate potential risks. While tech stocks have been performing well recently, it's important to approach investing with a long-term perspective and to monitor market developments closely. The tech sector's upward trajectory may continue, but it's important to monitor market developments and adapt investment strategies accordingly. By staying informed and making well-informed decisions, investors can navigate the dynamic landscape of tech stocks and potentially capitalize on the opportunities they offer. If you enjoyed our analysis of the tech stock rally, don't forget to hit the subscribe button to stay up to date with our latest content. We value your thoughts and ideas, so please feel free to share your comments and engage in the discussion. Together, we can make this channel a hub of valuable insights for all investors. Like, subscribe, and share your thoughts, because your feedback helps us create better content for you.